Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Canadian Solar stock so we can determine if it's a buy or a sell. Canadian Solar manufactures solar PV modules, and it also runs large-scale solar projects. The company is headquartered in Guelph, Ontario, Canada, and was founded in 2001. Let's get started with the model. This is a mid-cap company, 2.4 billion market cap. They're trading at $38 a share, and they have 65 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They report all their financials in US dollars, so we're going to look at the ticker that trades in the US. They did have positive free cash flow in 2019, a negative in 2020 and 2021. They were investing a lot back into the business. Now it's back to positive in 2022. It seems like the company has a lot of projects in the pipeline, so I'd expect pretty strong free cash flow in the future. Net income is the profit or loss on the income statement. It's revenue minus expenses. That peaks in 2022 at $300 million. Revenue is a sales for the company, and that more than doubles from 2019 to 2022, $7.5 billion. Let's look at the capital structure. $2 billion of equity, $4 billion of debt. They're 33% equity, 67% debt. Their net debt is $3 billion, so they have about $1 billion of cash on their balance sheet. They have a pretty high WACC, 13.5%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $5 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of $4.4 billion. We divide that by 65 million shares. And we get a calculated stock price of $68. They're trading at $38, so they're trading at a 45% discount. It's a really strong buy according to the model. Simply Wall Street values the company at $42. They're saying it's 11% undervalued. Two analysts priced this stock, and the average price target is 48. The lowest 35, the highest 63. Another 8 analysts priced this stock, and the average price target is 49. They're saying it's 31% undervalued. This is the company's stock price since they started trading. It's all over the place. It looks like they IPO'd in 2007 at about $15 a share. Lots of stocks run up real fast when they IPO. This got to over $40 in 2008. Then the Great Recession hit, and then it fell to about $2 or $3 at its low point. It went up again past $30. Then in 2012, it got real low again, around $2, $3. Then in the beginning of 2014, it ran past $40. It did drop below $10 in 2017. It was trading about $13 in the beginning of 2020. Then a lot of stocks really ran up in 2020, 2021. It was past $60 a share. Then it dropped below $30. Now it's trading between $35 and $45. I think this stock has some significant upside. I don't see too much downside with this stock. There's a lot of demand for solar, and this company is doing a really good job leveraging their business. There are 20 companies in the same industry as Canadian Solar, and if Canadian Solar has a number in red, they're worse than the median. If they have a number in blue, they're better. So they spend a lot more than average and median in CapEx. They have a pretty high debt-to-equity ratio. For every dollar of equity, they have $2.10 of debt. Nobody in this industry pays a dividend. Most companies have negative free cash flow. They have positive. It's the highest among anybody except Enphase Energy. They rank 6th in market cap. They have amazing price multiples. Price to book of 1.3, much better than the median average. Really good price to earnings, 8.1. An amazing price to free cash flow, 8.4. And price to sales of 0.3. That means their revenue is triple their market cap. They generate more revenue than any company except Jinko Solar Holding. Their 5-year annual revenue growth rate is 17%. Look at Enphase, 52%. Beam is 73%, but they're a really small company. And they have a low ROA, a pretty good ROE. So to summarize, I have them trading at a 45% discount. I rank their free cash flow 6 out of 10, their revenue 8 out of 10, and their ratio is 9 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.